NVIDIA had $1.1 billion of bullish premium just last week alone. That is a lot. It's a high for a week so far this year. For the most part, we have had a couple days around the billions, but this is a ton. And then Apple almost hitting $500 million last week is a lot for it, and no surprise, because if you go over to here on the chart, you can see it had a major breakout after they had their event last week. You can see not only was this a substantial move to the upside, it also broke out of a very lengthy range that it was stuck within for a long time. You can see all the way back here, the range started roughly around July of 2023. That's almost a full year that it's been range bound. And of course, this is a wide range, so it's still traded with trends and downtrends, for example, but we finally broke above it. And in today's video, I'm going to share the significance of Apple's breakout and how it relates to the general market. And then also, I'm going to look over Amazon because I believe there is a very strong similarity to what we saw with Apple here, although Amazon is basically the equivalent to around this stage before potential break of its range. So that's what I'm going to get into later in today's video. But to start it off here, obviously, like I just said, we had a massive break over what I consider to be the key pivot of 196.45. So going forward, as long as we remain above where this breakout level was, where this micro supply zone was from over here, then we can expect an uptrend to remain. And of course, if Apple remains in a macro uptrend after breaking out from this range, that is going to have implications on the S&P 500, for example. And I'll actually go over to NDQ since this will be a better example for you, because as you can see here, this is a ton of upside. We're within a very strong uptrend, a macro uptrend that is, and we can expect a lot more upside as long as these Mag 7 tickers can continue to hold with their strength. And that's what we've seen so far. That's why this is so aggressive. And I just wanted to show you this here because, again, I said it's aggressive, but you can see here just how much upside we've had over the course of really the past year and a half so far. And that brings me to my next point here, because I do want to show you a very similar thing with NVIDIA. We've been in a very aggressive uptrend. And of course, a lot of people probably think that the market as a whole, whether it be NDQ or NASDAQ or the S&P 500, is overbought and they want to short it. But in reality, when you have your third largest holding, NVIDIA here, and now your first largest holding for Apple looking like this, that's very difficult to short something like that macro-wise. It doesn't mean that there can't be a pullback, but until certain levels break, for example, 196.45 on Apple, and then over here in NVIDIA, until we get back below around where 96 to 98-ish is over here what this previous supply zone is, this is within a macro uptrend. And some people might find that hard to believe that it's even this low where the pivot level would be. However, that's just what I see right now technical wise. This is a very key level over here. We had consolidation before it finally broke out above. So as long as it stays above here, it's going to remain in that uptrend. And the same thing is the case for Apple. So I just want to start the video today by explaining the significance of that breakout in Apple, significance of the breakout that we had back in May here on NVIDIA, because when you have two of the largest holdings in the S&P 500 in NASDAQ break out to this extent and stay that far away from their key pivot level, their key bias level, basically an over-under level for where you can expect the direction of that ticker to go, it's just going to be very difficult for the market to have a substantial correction when that's the case. So that's what I wanted to start off today's video with. Also, one other thing here, just based on the flow from last week to show you, Apple had some insane flow. This is Friday, so it wasn't as crazy, but if you use the historical flow tab over here, you can see from the start of the week to the end of the week some of the crazy Apple orders that we saw. For example, we had this one over here, 2.1 million, 1.4 million, 1.2 million, all for the 210 strike. These were all September expirations. Saw quite a bit of an uptick in September and August expirations as of recently. This one was a put, so this was a standalone one, so really don't give that much emphasis to it when it's surrounded by calls like these. But as I scroll earlier on into the week, you can see some of the other orders. 200 strike over here. This one was in the money, but again, September expiration. And so we have some call sells as well, since people were monetizing their calls on the way up. And really, it's uncommon to have this sheer amount of flow on Apple for a given week, and hence why we saw almost $500 million worth of that bullish premium. You can see over here just a ton of other calls out the money for the 220 strike here, and this is for June expiration. So really within a week until the expiration took place, 1.1 million over here, 1 million for the 220 again with that same expiration. Just a ton of calls throughout the week overall. So this is something that I want to see happen in Amzn. And the reason I bring that up and is why I told you about it earlier in this video is because it has a very similar range to what we saw with Apple. Now, it's not as lengthy as Apple's. Remember, Apple was about a year and a half that had been consolidating within its range, so it's not the same in that regard. However, the range is very similar. We have a relatively wide range here on Amzn that it got picked up from before it gapped down below, but it was able to get picked up and get saved, as you can see from over here. And so far, it's just been consolidating within this range. You can see the lower end here acting as a support all the way up to the higher end resistance, and it's just continued to follow that trend thus far. However, with all of the other Mag 7 tickers beginning to break out, like I just showed you with NVIDIA, like I just showed you with Apple, there is potential for this one as well. There's potential lag so far, but once that lag catches up, essentially, you could see a potential breakout. So what is my trade plan for this? Well, first of all, we need to see a break occur before entering some type of a position, because you could enter around here and hope that it breaks out. However, if you don't have any confirmation established, then there still is the risk that it goes down to around 173 or even breaks below 173 and breaks down and has a new downtrend emerge. So that's always a risk if you add within the range. The range is only good to trade both ends. For example, longs around 173.62 up to around the 180s. Same thing, you could short from around 189, 190-ish for a downside, and that's been working thus far. However, what I'm looking for is some type of a breakout over 189.74. And what that would entail intraday is an hourly close above this level, because if you look back to Apple over here, you can see the hourly closed very strong with volume backing it above my 196.45 level. If you had entered after this hourly closed up here, roughly at 200, you could establish risk as an hourly close back under 196.45, and that would be your risk on the position. So what you're doing here would be the risk of, and I'll get it specific here, but essentially about 5 or so points on it, which is really not crazy when you take into account that within the following day, and I have to scroll all the way up here to see the extent of this move, within the following day it had gone almost 20 points. And even if you didn't hold all the way to that and you had a more conservative target of, let's say, 210, you're still looking about at 8 or 9, maybe even 10 points of upside, and you of course could hold runners as well. Is that the best risk reward? No. However, there are alternative scenarios that I'll share here that you can use as well for the Amzn example. So I'm going to go back to Amzn, because there are a couple scenarios that can occur when you have something like a breakout. Because in Apple's case, it was very sudden, very abrupt, a lot of volume behind it, and we saw a huge squeeze all the way up, which would be the equivalent, I'll draw it out for you here, would be the equivalent of if we were to go all the way up to 193 or something. This is not to scale, but it's just an example. If we went all the way up to 193 and closed the hourly up here, of course you have more risk, because your downside on that position would be 3-4 points, because you're looking at an hourly close back under. So that makes it a bit more substantial. What you can do in that case is add half of the position once the hourly closes, and I'm going to take this as the first hourly candle above in the future. Once the hourly closes, you could take one half around, let's say, 193, and then wait to see if it wants to pull back to around 191 mid. If that's the case, you can add another half to have a full size position. However, instead of adding full size at 193, you now have a cost basis of, for simplicity's sake here, 192 instead of 193 from before. That can help as well, because then your risk is far less than if you were to take everything all at once. And that also is just a good practice to average into positions, because this is still valid that it could have some type of a pullback over here, around here, maybe even go all the way back to retest the breakout at some point and then continue even higher. Remember, the risk would be if the hourly closed under, so around here, back under where that level is. In this case, if it retested the breakout and continued up, that's valid. If it wanted to just go back down to 192 and continue up, that's valid. And even as we saw with Apple, it could just continue to go all the way up afterwards. So there's a couple scenarios you can work with there. The 1/2 ad strategy helps in terms of minimizing the amount of risk. So that's just something I wanted to share today. But the premise remains the same. We saw a huge breakout in Apple. We saw a huge breakout in NVIDIA. Microsoft broke out last week as well. Cup and handle breakout over here. I can show you very quickly, but you can see on the daily a valid cup and handle pattern, as you can see from there. And we had nice wicks from over here that showed that the handle was starting to form, and then a big breakout above 424.04, and it just continued. So a lot of these Mag 7 tickers are starting to break out and substantially break out as well from a macro trend standpoint. So Amzn, there is potential for it here. Remember, we don't know when it's going to break out or if it will break to the upside. In this case, but what we can do is wait for that confirmation to be established, wait for something like confluence in the flow, kind of like we saw with Apple last week. Some crazy orders started to come through as it was breaking out. Amzn so far didn't see anything crazy from Friday, pretty light flow, but once this starts to pick up beyond just 2 orders over 500,000 in premium, you start to put a bit more emphasis on following it, start to put alerts. You can already put alert around 189.74, and once that level breaks, there is that potential for a trade setup. And as we've seen so far, they have been substantial breakout moves throughout the market. So that's why my eyes are set on this one. Could be as early as this week, could be a little bit later on this summer when it decides to break. Other than that though, as always, appreciate you guys watching this video, and I'll see you next time.